Good morning and welcome to today's edition of the London Session Open. Today is February 12th, 2020. I'm going to take a look at the markets. There's some good activity, particularly in the crypto markets, but also stock markets, which are up. The DAX just a new 2020 high. Crude oil prices as well are up. So it's quite busy, which is good. Always like a nice trend to be able to work with. In the world of currencies, though, things are coming a bit to an end in terms of trends. And we're starting to see the dollar weakening a bit. That's also what we're going to talk about. Before we start, though, let me introduce myself. My name is Alejandro Zambrano, and I'm the Global Chief Market Strategist at ATFX. I'm based in London. I also manage the site investingcube.com, which is the news site here online, I guess. Anyway, we have True Invention here in the chat box. Good morning to you. Anybody that wants to join me in the chat box, just join me here. You need to have a YouTube account. It's free to have. And the cool thing with the YouTube account is that when you have it, you can subscribe to our videos. And you can press the little bell button and you get a notification when I go live. You can also follow me on Twitter, of course, at AlexFX00. All right, so let's kick off. And why should you listen to me, by the way? Well, I've been training for quite some time, and I'm quite good at what I'm doing. And we're going to talk about that in a few minutes. But we are a little bit rushed today because in the next few minutes, I need to step away for a meeting. But let's cover the markets. All right, so you have your euro. So we have a bit of stabilization today. So yesterday we had the head of the central bank of the US, the Federal Reserve, Mr. Jerome Powell, and we had some volatility. The market went to the downside, but he didn't tell us anything we didn't really know or anything that's really going to change the outlook for the dollar. They're not going to look to cut or do anything right now. They will also continue with the repo operation, which is effectively pumping money into the system. They pumped in, I think, look at it from this perspective. I think they went from 3.8 trillion to I think 4.8 trillion, and the numbers show that the balance sheet increased with about 11% since September. Stock markets at the same time have added maybe 15%. So you're definitely seeing that pumping of money, stock markets higher, but usually the dollar would actually weaken at those situations, and that's what I thought it was going to happen. And some people put a lot of analysis into that. But the dollar has been gaining, and I think it maybe could to do with the coronavirus and how that has been influencing. And in particular, in the Aussie dollar and New Zealand dollar, we have seen weakness there because of their proximity to China. To give you an idea, I think in 2003, when the SARS crisis broke out, 7% of New Zealand export went to China and Hong Kong. I think today, I think it was closer to 28 or so. So 20% of exports go to China and Hong Kong, but 50% of all exports go to Asia, excluding Japan. So you have a lot of concentration of businesses focusing particularly towards that sector, and that's why we saw a bit of weakness and at the same time strength in the dollar. Now, what you're seeing here technically is the market is stabilizing, and we had a decline. This is pretty much 200 pip here without any correction, and we're very close to the 2019 low. In the case of the Aussie dollar, we pretty much reached that level. And I do think we're going to trade lower, but as I said yesterday, I don't think it's time to short sell where we are right now. Let's see if we can go up to maybe 109.78, which is pretty much the November 14th low. And as long as you're below 110.22, I think this market is going to be bearish. It might go up and then probably lower. GBP versus the USD, I think it's time to actually give up on this bearish view. A few days ago, I said, look, to sell here for it to go down. And then we went up on February 10th, 10 a.m., and then went down again. And then yesterday, we pretty much went up to the same level. So now we're pushing deeper into this. Now, if you look at the Aussie dollar, New Zealand dollar, the Euro dollar, it all sort of looks like it's going to go a little bit higher. And I reckon this is a false move. Now, I'm going to stick with the trend of funding level there, but I would definitely not be selling here if I had the option, because I do think it probably go up to 130.13, and then we'll see what happens. But I reckon we could potentially be dealing with a false move here because it has not reacted the way it should be reacting. But again, I'm going to leave the analysis in the chart the way it is. If one is bearish, one will stick with it, then that's fine. Dollar yen is going up a little bit. And you have now 109.49 coming in as a level. I still want to wait for that break to the upside before I can sort of say this is the new trend defining level. And if you're really bullish and if you want to go upwards, though, you can still work with 109.49 as the trend finding level. It might go down a little bit and go up, but again, I think it's a bit too early. If we look at something like the German DAX, it has now turned bullish. So I said, let's see what happens here. The market went down and then it went up. So this is the new trend finding level. The market has risen a bit already. Sometimes it will just trade upwards and go up and up and up and up, and you just miss out. But if you did what we talked about a few days ago, then you're already long the S&P 500 from 3316.9. So you don't really care because you're already long here, and you already had, if you close your position now, you would book 1.76, 58 points profit on that one. And what we'll be doing here is just wait for that pullback. So I think let it close, and we did close on the 1 hour here. Ideally, we close a little bit longer, and I think if we do pull back then to 13,612, then that could be an option. Now, I'm very excited right now the way I speak. Obviously, everything is really bullish, but it's also about to close, unfortunately. It is about to close. So if this turns negative before the end of the day, then suddenly, we'll be trading a bit deeper. But the way things is set, things are working out right now. Again, the Fed is not going to do anything. They're going to keep on pumping money into the system. They are pumping money into the system. You got all the PMIs turning higher. You got the NFPs and the ADP numbers from last week as well doing good. And coronavirus, the growth there slowed down quite significantly. And we're starting to see as well businesses coming back online. Foxconn, which produces a lot of the mobile phones for places like iPhone. I think they also do the PlayStations and the Nintendos. I think this is one of those, I guess, not both. They're I think 10% of the staff is back now working, but they're still gonna take some time. So I think they said in some of the statements that by March or so they aim to have 80% of the workforce back. So it's probably gonna take a little bit longer time before this is sorted, but things are going back, and I personally think we could have some shocker numbers in the Chinese data coming out probably on February, and I think that will influence things, and the New Zealand dollar may go down as I talked about before, but I think for now, and the Aussie as well, but for now we're starting to see a little bit stabilization, and I think what could happen here is potentially seeing a bit of dollar weakness over a few days, and then we'll see what happens if things go back, people focusing on the good data from the US. Okay, crude markets. We talked about this thing, and you know what I think? We talked about it already a few weeks ago. You have the break to the downside here that did not start properly. You now have a nice stabilization here. So it's actually very straightforward. My trend finding level is just below here at 48.93, and if you do trade below it, this whole thing will break out from this range, and this market could potentially head much lower. The target for this rectangle would be something like a break here to the downside, and that could potentially cause the market to trade down to 37. That's what the pattern is telling me. Are we gonna go all the way down there? Probably not. Can we go down to the 2019 low, like the euro dollar and the Aussie dollar? Of course we can. There are some issues here. There are reports that because of the slowdown in China, crude producers and also natural gas producers, they haven't been able to. China has not been able to take on the shipments that they would usually do. Because they probably don't need it right now because there's not a lot of business activity, and then people are sick, so the ports are not working properly. In fact, two of my neighbors, one works for Shell, the other one works for Total. I mean, I don't know about the Total because I only met one of the neighbors, but the one for Shell was actually telling me that and echoing what is being said in the public about the situation over there. And that could spill over to more weakness in crude oil markets and energy markets. But if you look at it from the numbers wise, the market slid with 14% on the 22nd, which is when we started to get news about the situation, in about the coronavirus. So I reckon personally that this might have just been a false move. And when we now took out 50.54. This trend is now starting to turn bullish again, and I think we can go a little bit higher. And I think if we indeed bottom out here, then we could probably go back to maybe 54.84. And if we take fib from the very low to the very high, you see the 50 levels at 57.5. So I do think we could potentially see this stabilizing. Gold prices then. Well, gold prices is a bit quiet. We have a descending triangle. You got yourself these levels. I do ignore the spike. You got this upward rising trend line like that. And then a break to the upside could take you up to 1642.85. And if you're really bullish, then you'll be looking to buy down here at 1550 with stops below 1535. That's what I think at least the market could be doing. Doesn't mean that you should go out and do it, but that's what I think people will do it. Cryptos, that's where all the fun is as well. I mean, sorry, stock markets, take it back. Stock markets, a lot of fun for a long time. The benefit of cryptos, though, it just goes on steroids. Things have been going really, really good. Of course, if you trade something like Bitcoin, it is, because it's the biggest coin, is slightly slower moving, but there's a bunch of other coins that move 6% per day, 12% per day, and it's looking really good. In the situation of Bitcoin here, the market bounced from slightly higher levels than I suspected. And I'm actually, as I said on the day, I'm actually very happy about that because I'm actually long myself. Not Bitcoin, but I'm long other stuff at lower levels. And if you look at this today, this market is starting to go a little bit parabolic, okay? Which means that people just buy and buy because they don't want to miss out. They're fearing out for missing out. So I'm tightening things up now quite strongly. And at one point, it's just going to snap and it will slide straight through that trend defining level. But we'll get out at the right time, which is when that happens. And that level right now for me is 9,500. So I think maybe down here around 99.78, some people might look to rebuild the position if we would come down to those levels. And with that in mind, we're actually going to see if we can answer a few questions, but I'm also going to just summarize a few things. And I'm not going to be able to answer too many questions today because, fortunately, a bit of a rush. But if you are a trend follower like I am, then you know how frustrating 2019 was. 2019 was very frustrating. We did not have very strong breakouts until we had the breakout in stock markets by the end of the year. By the end of the year, though, me personally, because I've been dealing with breakouts, and also by the end of 2018, breakouts were being a bit choppy. But what is quite interesting is this, is that if you're disciplined and you manage your risk properly, even if I had a bad year in 2019, in less than 1 month of trading, I effectively erased, I think, like 70% of all my losses I had for a full year. That is if you manage your risk properly. When I lose, I try to stick to lose maybe 1%, 1.5% at most. And when it goes good, I like to really push it. And when trends come, they come really quickly. And that's a very, very important story. And remember that, because if you're a trend follower like I am, you're not always going to have good years. At the same time, if you're a range-bound trader and you're happy to sell highs and buy lows, today, in the last few months, this is not your time. Think about all these professional money managers that have been betting on Tesla to go down. Well, a lot of people lost a lot of money, and then at the same time, you have a lot of people making a lot of money because of that. So not all strategies are going to be working at the same time, and you can easily have periods where things are very, very, very sluggish. And unfortunately, this is a bit difficult to get around it because some people are better at trending trends like I am. Some people are better on doing range bound, and it's very difficult to find someone that is really good on everything and can consistently always make money on the markets. There are some people that can do it, but not everyone. And I think that's something to remember. But key point, manage your risk correctly. It's okay to have a few breaks, and then when things go good, you try to make up for it, and you can stay ahead. And if you get on the right trend at the right time, then you can make some very decent profits. If you get it wrong, you can lose, of course. Just to give you an idea, I bought ADA Cardano, that's called, down here at 4.2 cents. thing is now almost at 6 cents. That itself is a 40% move unleveraged. I also bought some EOS, bought a bit down here. Didn't really make any money on it until I bought it again here at 3.96. Now, a few days later, this thing is up with about 22%. So there are trends. You just need to be in sync when it happens. Okay, let's see if we can answer a quick question or two. Otherwise, we're gonna wrap things up. How to trade the euro? The euro, I mean, that's the other thing. Not all markets are always good. There's an idea. People tell you, oh, you know, I only trade the pound or I only trade the euro. I know people that only trade the FTSE 100. And the problem with that view, the way I look at it, is that you need to become an expert on trending markets and non-trending markets. And between that, you have the different stages of bullish and bearish markets. So you need to become an expert on everything. Now, again, some people can do it, but even the most seasoned traders, I know a guy that manages money, and he's been trading for a living. And I'm not talking about, I mean, he's doing some good money doing this. But even him, you know, where he would before trade euro dollar, he will now trade Turkish lira or Euro South African rand. They would go more into those markets where there's more activity and there's less sort of noise. So you need to be agile. You can't be stuck with just one individual market. Now, if you do run a trade of Euro USD, then we did have, as we talked about earlier, we had, for example, the break here, which worked out really, really good. The whole thing did decline. And now we're waiting for the rebound. And then we can hopefully sell out on the way to the downside. But don't get married to just one market. I look at about 120 markets and I look for opportunities across all these. And then I just see, okay, this is interesting. This is not interesting. And I do a list. That list is 10 different markets. And then I do, like, I put a bunch of alerts. So I get a notification on my phone and an email when things are happening. I load my chart and I say, okay, this looks like a breakout. This looks good. And then I get involved. Okay, guys, we're going to wrap things up. I want to thank you so much for watching. Don't forget to like this video. And if you do have any questions, you're most welcome to reach out to me. As well, I'm available on WhatsApp. And we also do a free trading course, by the way. Is it going to solve all your problems? No, but it's going to probably help you to get going. So we have the free trading course. It's you sign up here and then someone contacts you for more info about it. And then you have as well the trading summit, which is up here. So the trading summit is also quite interesting because I invited good traders. You got Charlie, Glenn Goodman, you got Ian Foster, myself, Angeline, and Zach. And this is also free to watch. These are just videos which you can watch. You just need to be a member of investingcube.com, which is free as well. Just click on join, which is up here. Okay, we're gonna wrap things up. Have a great day, guys, and I'll see you guys tomorrow. Thank you.